Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're talking about a chart tool that goes way back. It was introduced in 1960. As a matter of fact, I would say it just hit its retirement age. Very interesting tool. We're going to be talking about Keltner channels. So this is kind of going to be like vintage charting techniques for you whippersnappers. I think this is going to be a good one. Before we get into how it's constructed, how it might be used for planning and placing trades, I first of all want to say hello to everybody who's already chatting in out there on YouTube. Great to see all the familiar names. Hello to anybody that might be new. Hello there, Jim. Wheel, Chris B, we have Danny and Paul, Robert, Jay Richardson. Who else is here? Marquise out there in South Florida. Everybody else, thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you are among those that are here for the very first time, I do want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. It's a great way to watch these webcasts, but you're certainly invited to join us in this Friday webcast series. We kick things off promptly at 1 Eastern time. We'd love to have you here in our audience. Now, I also want to let you know that my very good friend Kevin Horner is hanging out in the chats with us. Kevin and I have worked together for years. He's going to be keeping an eye on questions that come into the chats. If I don't get an opportunity to address those, Kevin's there to pick up slack for me. Thanks for having my back there, Kevin. Kevin and I would also like to issue an invitation to everybody listening, whether live or on the archive, to follow your favorite Schwab presenters on social media. You can find Kevin and me on X. Go to X and look for @KevinHornerCS to find Kevin. You can locate me there on X @CameronMayCS. You can also find and follow me on LinkedIn. Just go to linkedin.com/in/CameronMayCS. And if you reply to my posts on social media, I just try to reply right back to you. Great place to connect with your favorite Schwab presenters in between the live streams. But let's get into this discussion of this technical tool. It's been around. It's been around for longer than I have. But as we do, of course, we need to consider the risks associated with trading. This is important information, so bear it in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right. So even though this tool's been around for quite a while, I would still suspect with about 120 people watching, not everybody's heard of it. I've actually built this into some of our previous discussions about tools like the TTM squeeze or Bollinger Bands. So you may have had an introduction that way, but I really haven't discussed Keltner channels in over a year and a half. So I thought it was time to get back to it. So just give me a quick yes or no, or a Y or an N. Are you familiar with Keltner channels or are you not familiar with them? And while you're chatting that in, I'll just give you a quick agenda for what we're going to be covering. We're going to be first taking a quick peek at what's going on with our portfolio, look at the market backdrop. We'll have a look at the S&P 500. But then we're going to dedicate our time to talking about Keltner channels. We're going to talk about how the indicator is built, how it might be used to plan and place a trade. We're going to run a scan using Keltner channel filters, and then we're going to use one of the resulting stocks to plan and place a trade in our portfolio. All right, so I'm getting a lot of yeses, not a lot of nos. That's just exactly what I suspected. Yeah, it looks like it's split about 50-50. So like Olga's saying, I've heard of it, but I haven't used it. Okay, well, let's make sure that everybody can follow. I don't, even though this is called advanced charting techniques, I still don't try to blow past anybody's understanding of a tool. So let's go right to the Thinkorswim platform though, and we're going to start with just a quick review of our Pfizer position. Just took this a couple of weeks ago. It was the last, last weekend. We didn't have our webcast, so this is quick follow-up on this. Bought 400 shares. Here was the logic of that trade. So here's our chart of Pfizer. This entry was on the evidence of a market forecast cluster where all three of our stochastic indicators are down below that 20 signal line all at the same time. So we took an entry right here on this big white candle day. Looks like we were right at a support level. And that support level is really stretched back through almost the entirety of the last 12 months. So we have a plan in place to take profits if we're able to rise back up to previous highs at 26.50. We have a sell order in to take us out of that position if we can realize those gains. Or if we start to struggle, not every technical signal works. So if this fails, if we've slipped down below this support level and hit 12-month lows, we're going to get out at $23. Well, right now we're just a little bit above water. I think we're up about 60 bucks on this trade. Yeah, $54. So that's it. We're just going to let that one continue to work. Now, if you missed this discussion of the market forecast tool, I do have a recommendation for you. It's okay if you can't make it to our live streams. We of course enjoy your contributions here. We invite you to join us in the live streams. If you can't make it though, you can catch up on the archives for the vast majority of our webcasts. They're recorded and then posted to our YouTube channel. So make sure you've subscribed to our YouTube channel if you're new, or if you haven't subscribed yet, pop down, click on the subscribe button. It doesn't cost anything to do that. But this is where you can find our live streams, but you can also find our playlists. So if I click on playlists, this is called Advanced Charting Techniques. We have all kinds of different webcast series, and mine happens to be a little bit down below the halfway point. So there it is, Advanced Charting Techniques. If I click on View Full Playlist, here was that discussion of the market forecast tool that we had 2 weeks ago. So you can watch that. Okay, but that's it for our only trade. I've had the majority of the last 2 months, 2.5 months off. So I haven't been around to place a lot of these trades. We don't have a lot to follow up on right now. So let's continue to build out this portfolio. But let's do that by quickly having a look at what the market condition backdrop might be. So I'm going to come to the S&P 500, and we're going to load up our TVM study set. So let's load. There's our TVM strategy set. TVM standing for trend, value, and momentum. And what we're looking for here from this study set for the traders that use this, first of all, we look at a combination of moving averages. Now, these are triangular moving averages, and we're looking to see if the 50 is still above the 100, and it is. So that's kind of a check for bullishness for the trend. And interestingly enough, price is even all the way up there above that 50, maybe a particularly strong trend. Next, we might look down here at our value oscillator, which is our RSI oscillator. And when RSI dips down below 40, sometimes we might see that as particularly strong, apparent short-term value. It's not a guarantee that prices are going to go up from there, just a typical interpretation of RSI. We got down there recently as we bounced off that 50 triangular moving average, still in a bullish condition on the trend, but that RSI is still kind of strengthening. So even though it's not necessarily in value territory, that would still be interpreted traditionally as a bullish confirmation. So that's a check for trend, a check for value for the bulls. And finally, let's look down here at our momentum oscillator, which is our MACD histogram. The MACD rises and falls, hopefully helping us to find highs and lows within a longer term trend. And specifically what we'll look for in this webcast series is what we call a red shift. That's where we have the bright red MACD. It's dipping lower and lower, momentum kind of stalling, and then picking back up again as we shift to dark red. So we had most recently that momentum shift right here. Let's highlight that. And that's even carried through to a crossover above our zero line. So all of this adding up to, apparently from our momentum oscillator, also kind of a bullish signal. Now, Noodle Brains, I might need to do a, yes, the short answer to the question is yes, but I'd have to do kind of a deeper dive into that. When someone asks me to compare two indicators, it involves a lot of explaining in order to contrast the two, but I'll just leave it at yes. But in any case, let's just say check for the bulls on trend, check for the bulls on value, check for the bulls on momentum. So we're going to be adding to our bullish stock portfolio, and we're going to be taking a full-sized position. All right, sometimes a trader, if they see a little bit of squishiness in these indicators, they might scale back the position or hold off entirely on new entries. But let's go ahead and say that we're that TVM trader who sees things as being bullish. So let's go look for a bullish signal on some indicator out there. How about we look to that indicator that's been around for a long time? We're going to talk about Keltner channels. So First thing I'm going to do, let's just clear off our study sets. So I'm going to click on studies. We can just remove all these studies. This doesn't delete the study set that I've created. It just removes them from view and sort of cleans up the chart. But I want to stay here on the S&P 500 because there's been kind of an interesting recent development relating to Keltner channels. And let's apply the channels to the chart. So I'm going to go up here to our Flask icon. Let's type in Keltner for Chester Keltner, who was the creator of this indicator way back in 1960. Let's add that to our chart. And before I click apply, well, I don't know, I'll just click apply. But you'll see that the channels have been added to the chart back here, but I want to just quickly look at these internal mechanisms of the indicator for just a moment. You'll notice here some key numbers and terms. 1.5, 20, close, and simple. So what this is doing, the 1.5 is going to be key. I'll tell you what that is, and the 20, what that is. But this indicator uses closing values, and it does use simple moving averages in its construction. All right? That should be familiar to a lot of you. These two we need to explore a little bit more. I don't know. Spoiler alert, it uses a 20-period simple moving average, and since we're on a daily chart, it's going to use a 20-day simple moving average in the construction here. So let's click OK, and let's talk about these three lines. Notice that we have three. We have this green line, we have an upper, what we call the upper band, this purple line, and a lower band is the red line. So let's come over here. Let's close out this information from yesterday's webcast, and let's start to outline the construction of Keltner channels. So here is the Keltner construction. I'll throw in channel. Okay. So the first thing we have is what we call the middle line. Why don't I start with the upper one? Well, the upper and the lower are a function of the middle line. So that middle line is just a 20-period simple moving average. I'm going to abbreviate that to SMA. That's this green line. If you're not familiar with simple moving average, it looks at the closing value of whatever symbol you have charted. So in this case, it's the S&P 500. What it's doing is telling us over the last 20 days, the average closing value of the S&P. And so if we look at this number over here, 7462.86, that's the average closing value of the S&P. And for some traders, they'll look at how those average values change over time. So for example, those average values were much lower back in February before this most recent bullish run. It's a moving average, but they'll look at that as an indication of trend. That's one thing, but also potential areas of support and resistance, price floors and price ceilings. And actually, we're kind of seeing maybe a bounce off of that 20-period simple moving average recently. So the middle line, I don't think that's any huge insight for anybody that's been around technical analysis for any period of time. It's a 20-period simple moving average. But what is the upper band? And this is where we need to go back to the inner workings here. It starts with that moving average. How about I be consistent with my acronym? It starts with that simple moving average, and then it adds a specific value. And specifically, now let me outline this. It's the ATR times a multiplier. What in the world is that? So we take our simple moving average and we draw another line that's a specified distance above that moving average. And here's that distance. First of all, we start with the average true range. Let me put that on the chart for just a moment for reference. So here's our ATR. Let's add that to our chart. Click apply and click OK. So if you're not familiar with the average true range, it looks over the last 14 days, and it just tells us how much our chart has moved over a 24-hour period on average for the last 14 days. So if we look at this value over here, 86.59, this is telling us that on average, the S&P has traveled up or down, total range, about 86.5 points over a 24-hour period. That's what that is. All right. Now we just draw a line Well, we could go 86 points above, but this doesn't do that. It actually takes that ATR and it multiplies it by something. What do you suppose it multiplies it by? Well, our multiplier here is 1.5. In other words, our line is drawn 1.5 times the average distance or the average travel of the S&P 500 above and below. Well, the below is giving away the lower band, but you probably already figured that out. 1.5 times average distance traveled. That's where we draw that upper band. The lower band is going to be our multiplier times ATR subtracted from our moving average. So what's the lower band? That's our simple moving average minus the ATR times the multiplier. I should have just copied and pasted it. It would have been easier than using my rudimentary typing skills. All right, so let me just show you this equation in action. All right, so let's look at, if we know that our ATR is 86 point, let's just round that off to 86.6. Take 86.6 and our multiplier is 1.5. 86.6 times 1.5, oops, try that again. 86.6 times 1.5 is 129.90. That's 1.5 times the distance the S&P travels in an average period over the last 14 days. And then we just add that to the current simple moving average value of 74.60. Let's call that 74.63. And our upper band should be around 75.92. And you can see with a little bit of rounding, that's right about where we are, about 7,600. And then we would just reverse that, subtract 119 or whatever the number was for our 1.5 ATR, and that gives us that lower band. So what this is all doing is that we're looking for short-term extreme departures from quote unquote normal. If our moving average is representing kind of average prices over the last 20 days, well, sometimes price will run away from that average. Other times it'll run away upward. Other times it'll run away downward. And for some traders, they see those comparatively extreme departures as potential entries or even potential exits. So there's our Keltner channel construction. If you need to go back over that, and I think a lot of you are just going to latch right onto those concepts. But if you need to go back and revisit the logic of the construction, you can just go back and watch the first 15 minutes or so of this webcast again on the archives. Now let's leave that open. I didn't need to close that out. But the construction is interesting. I always like to go through that because I know that we have plenty of watchers who really like to understand what they're using before they attempt to use it. And again, this is not a sales pitch for any technical indicator. I'm not saying that someone should be using Keltner channels or any other indicator that I choose to demonstrate. But just I like to introduce the tools that are available on Thinkorswim and leave it up to the user to decide which ones may play a role in their portfolio. Okay, Corey says, why 1.5 and not 1.25 or 2? How bullish are you? It's a good question. Why do we use 1.5? Because Chester said we use 1.5. Who's Chester again? Chester Keltner, guy who constructed this. Not every trader uses 1.5. 1.5, I will say, creates relatively, you'll notice, these lines are not terribly high above our simple moving average, not terribly low below our simple moving average. And for some, they may choose to widen those bands. Now, what that might do is it'll tend to create, as we start to discuss entry signals and exit signals, it'll create fewer signals, but hopefully the trader who's making those adjustments, what they're shooting for is hopefully improving the quality of the signal. That's certainly not guaranteed. Yeah, good old Chester, Mark, yeah. But this is a customizable indicator. So for example, maybe the trader prefers to use a multiplier of 2 instead of 1.5. Maybe what they're looking for are more distant departures from the average as defined by that 20-period moving average. So in that case, maybe they dial it up from 1.5 ATR to, let's say, 2. We could do that. So let's do that for just a moment. I'm going to revert back to the 1.5. But if I want to customize a study, I can just click on the little flask. Let's go to our Keltner channel study and click the little gear icon, which is an indication that something can be customized here. And we'll just change the factor. This is the multiplier to 2. And let's do this. No, it's not going to allow me. Oh, you can see just poking out over here. See the lines right there? Right now, again, those are drawn above and below the moving average, 1.5 times the average distance of travel over a 24-hour period. If I crank this to 2 times the average distance, what we should see is the purple line going up a bit and the red line going down a bit, providing a little bit more distant definition of extreme. Let's see. If I click apply, keep your eyes on the lines over here. Let's click OK and click apply. And did you see that? Yep, our lines widened. The 20 simple moving average actually didn't move. It looked like it does, it didn't. So that's what a trader might do if they want a little bit more distant signals. Now, again, that's not always inherently an improvement. It's just a different way to trade these things. So let's go back up here. Thank you, Mike. Good to see you too. Let's crank this back to 1.5 and let's talk about generating trade signals here. A couple of different ways I wanted to discuss potentially trading, and I'm just going to use the S&P to explore the concept, and then we'll go apply it to an example stock. All right? But let's hide this left column for a moment now. And I'm going to come down here and open up a drawing set that I created before the webcast. There's our S&P 500 or SPX Keltner channel. Oh, I don't want to delete it. Did I choose delete? Let's choose. There we go. That's what I wanted to do. All right. So what I've drawn here are just to draw the eye to potential trade signals. There are a few right here, and it is a different one that's just happened recently. Mike, you love these? Great. All right. Well, for a Keltner channel trader, what they're looking for is for price to fall, reaching a potentially extreme low. Now, the extreme is defined by 1.5 times ATR below average, and that may be an opportunity if price starts to rise again. So here's the first qualifier before even looking for an entry signal. Sometimes Keltner channels are used to place bullish trades, sometimes to place bearish trades. For Keltner channel traders, the first thing they might look to is which direction the moving average is headed. So if we're looking for, let's say, a bullish signal, think back on our review of the S&P 500 using that TVM strategy set. Let's just say that we're bullish. Well, the trader might look, first of all, to see, does the trend appear to be going up, at least according to the 20-period simple moving average? If it is, has there been a recent departure down below that trend, hitting that lower channel? If it does, the touch doesn't actually require a red or a white candle. Just touching that lower Keltner channel may be enough for a trader to take an entry. Others might wait for a confirmation of price to start rising up above that channel again. But I just highlighted here, here's an upward sloping 20-period simple moving average, and we touch that lower band. There's our entry. Well, this may work or it may not. So the trader will typically then plan for 2 potential exits, one for profits, another for just taking losses. Manage the downside of the trade. So let's talk about the fun side first. When might profits be taken? Well, if the purpose was to buy at one extreme, it may be to sell, hopefully, at the opposite extreme. Buy at extreme lows, sell at extreme highs. And I'm using that term extreme. It's not my application of the term. That's just sort of a normal way to talk about Keltner channels. All right. Jim says, can I set up an alert when the signal touches the bottom channel? Yes, Jim. I don't know that I'm going to be doing that today, but I will show you how to conduct a scan, right, to look for potential signals. So for some traders, as soon as it touches, they're in and exit if we get back up to that upper band. Now, That's if the trade works. Sometimes the trades don't work. So where might we plan to exit? Well, a common exit is to just plan a stop just below the low of the signal day. All right. So if the stock refuses to continue higher and it starts to come back down lower, maybe the plan is to get, maybe $1 below that candle, maybe a percentage point below that candle. It's not typically a huge amount of allowance there that, the trader probably recognizes that these are relatively quick swing trades. So if there's relatively short, limited upside, maybe we don't want to take an enormous risk to the downside. So stops are commonly placed just below that candle low. So that would be one potential way to trade Keltner channels. Now, a second way is kind of moving back to just traditional moving averages, but a little bit of a twist here. So let's look what's going on with the S&P 500. The S&P is not what we're trading today, but we can still teach the concept. Just pretend it's a stock. Sometimes a stock gets up between the simple moving average and the upper band, and it pulls back down and bounces off that upper band. Let me zoom in on this period right here so we can kind of focus on that. So we've come down recently and touched the simple moving average and started to rise. Now that's a second potential bounce entry using Keltner channels. However, we're already very close to the top band. Well, in this case, the trader taking these signals is typically assuming that the stock has the momentum to carry it up through that channel. So instead of just targeting the channel, which is pretty close, they may look at doing what's called a measured move trade. And what that means is we simply look to the move that commonly precedes these sorts of bounces, where we've moved up in kind of a flag pattern. You might see this as a bit of a flagpole, and then this is a flag itself. Yeah, but a measured move trade. So in this case, we'd look at the length of the previous move and maybe use that as a projection for how far up we think the stock might go on the next move. So here's a quick technique. If we've drawn a line here, we can always just do this. So you just eyeball it, say, well, let's see, we've gone from this low to that high and see what dollar distance that was, and then look for a potential move from this low to some future expected high. Or we can just right click on our drawn line, duplicate that drawing, and just move it right up to that low, and that might provide a target price for us. So that's a second potential approach, but we have to plan. It might not work out. Where do we place the stop on this? Well, just like with the lower band bounce, we may place it just below the low of the signal day. So that might be below, in this case, this I think, who was it that introduced it? It was Ben that was talking about a dragonfly doji just yesterday. Yeah, it looks kind of dragonfly-ish to me right there. Or it could be a hammer candle. But in any case, whatever you call it, just below that low. So that's it. There's your introduction to Keltner channels, how they're built, how they might be used to plan a trade. But we've been talking about hypotheticals on the S&P 500. Let's go find a stock to trade. Mike says, never heard of Keltner trading. I'm more used to Bollinger Bands. Yeah, they're actually similar indicators. You'll notice they look on the surface quite similar, but they're also substantially different. Keltner channels use ATRs. Bollinger Bands use standard deviations. Keltner channel 1.5, Bollinger Band 2.0. But actually, those two are used in combination to create another indicator that we've discussed called the TTM squeeze. So yeah, if you want to go check out TTM squeeze, we've discussed that in the past, and it is a combination of Bollinger Bands and Keltner channels. Anyway, let's put together a search. And what I want to look for explicitly today, let's zoom back out here. Come down here and click on the zoom out feature. Oh, I kind of zoomed in. I gotta change that back to auto. There we go. But I want to look for these sorts of bounces off that lower channel. Let's put ourselves in the shoes of someone who's looking to trade extreme to extreme. So We can just go look through a series of stocks and just eyeball it. But I've actually constructed a scan that you can construct at home as well. And it looks for those sorts of signals. So let me bring that up here. I already have it saved. If I come up here, click on load scan query and go to my personal, you'll notice that we have our Keltner channel. Let's go down here to Keltner. Did I not save it? That's a possibility. I would do something like that. No, there it is. There's our S&P. I run it through the S&P 100 as an example. Keltner channel bounces. Actually, I'm gonna double check one more thing here because I think I just caught some. Yep, I thought so. Keltner channel bounces is how I spelled that. Chris says, did Keltner discuss why the 1.5 ATR seems to work as a pivot or support area? Well, Chris, this is a good question. There's sort of complementary timeframes being used. So our simple moving average is short term, 20 period or 20 days, right? And ATR is also short term. So basically we're looking at it's about 4 weeks trend line, 20 days in trading is close to 4 weeks or a month. And then we're looking at the fluctuations within that trend. So we're looking at basically 4 weeks trend, and then looking at 1.5-ish week departures either up or down, or 3 weeks total in a cycle, 14 days. So that's it. It's sort of a complementary pairing. If we lengthen the time frame of the moving average, that's when the trader might lengthen the ATR out a little bit to make sure that they still match. Somebody just asked a question, do you record today's stream? Yes, and this will be posted to our YouTube channel. I showed how to subscribe a little bit earlier. I'll show you where to find that recording again in just a moment. But let's build a scan. I'm going to build it from scratch. Rather than just loading the one I already built, which I was planning to do if we didn't have enough time, I want to show how to build this thing from scratch. So first thing I need to note is I am now on the live platform. We're going to be using some tools here in the scan tab that are not available on Paper Money. So this is just an example. It's a mock-up live account. But I'm going to come over here to the right, and I'm just going to delete those default stock filters. And instead, we're going to be using 4 study or technical filters. So let's go ahead and choose all 4 of them. Each one of these are going to be custom. So let's start right up here at the top. Let's go down and create a custom scan or a custom filter. Get rid of the ADX crossover default. And the first thing that we're going to look for is to make sure that S&P, that S&P, the 20 simple moving average is uptrending. So I'm going to use a combination of time frames to help with that. So the first thing that we'll do is we're just telling the system, okay, we're looking at a study. Which study are we looking at? The simple moving average. Which simple moving average? The 20 period. Okay, what do we want from that 20 period? Well, we want that 20 period simple moving average to be higher now than it was sometime in the past. That might be an indication that's uptrending. So the first thing in that comparison, we're going to be doing 2 comparisons. We're going to look to see that the 20 period simple moving average is greater than a study, the simple moving average again, from an offset of 21 days ago. Why did I choose 21 days? Well, actually, if we're really getting nitpicky, 21, 22 days is about a month in business days or trading days. All right. So I'm going to compare today, no offset, 0 offset, to 21 days ago. And let's set the length of our moving average to 20. So if you follow the logic here, we're looking to make sure that the 20 period simple moving average is higher than it was 21 days ago. Let's click save, and it'll actually spell that out for you here. Simple moving average of 20 is greater than the simple moving average. Actually, if I click OK, it'll be a little bit easier to see here. Greater than the simple moving average from 21 days ago. Now I'm going to repeat that process, but I'm going to make sure that the simple moving average today is also higher than it was yesterday, because sometimes it can go up. It's still above where it was a month ago, but it's on its way down. So let's just do this again. Let's do custom, delete the ADX, add our condition, study, simple moving average. The 20 is greater than the simple moving average from 1 day ago, but it's the 20-period simple moving average. There we go. Let's click OK. So our simple moving average is greater than it was 21 days ago. It's also greater than it was 1 day ago. That should confirm an upward trend. Now we're looking for the position of price within that upward trend. So ideally, what we'd like to see is that it's below this 20-period simple moving average, or let's just say the average, but above that lower band. We want it down there in that sweet spot. So let's do that. Let's do a custom search, delete that, add our condition. Here, we're using our Keltner channel study. And we want to focus on where it says plot. Notice the plot is the average line. That's the 20 simple moving average. So in this case, oh, you know what? No. I got a little bit ahead of myself. We don't want the Keltner channel. We want the price, closing price, that is the price of the stock, to be below, let's say less than, the study. And in this case, there's our Keltner channels. We want our price, stock price, to be less than the average in our Keltner channel. Okay, we're just going to click Save. So the close is less than the Keltner channel average. There we go. But we don't want it to be all the way falling down below the average and just collapsing. We want it to be below the average, but above that lower band. So same process. Kind of botched up the first one, made it a little bit awkward. This one will be a little bit smoother, a little bit easier to follow. We just need to delete the ADX crossover. So we're looking for the stock price, closing value, to be greater than a study known as the Keltner channel. But we don't want it to be greater than the average. We want it to be greater than the lower band. And save. So here's what this is doing. This is right now going to go look through all stocks and look for moving averages that are going up higher than a month ago, higher than yesterday, where the price is between the average on the Keltner channel and the lower band. But I'm going to direct this, all stocks, there's going to be a bunch of them. Let's make this a little bit more specific. And this is where we're going to bring in the S&P 100. Okay. That's it. There's our scan. And what I'll do, let me run the scan. And there we go. Looks like we have about 10 stocks within the S&P 100 where that price is falling. If the trader defines the positioning between the average and the lower band as being the sweet spot, these stocks all meet that criteria with also an upward sloping 20-period simple moving average. Now, let me do this. Before we grab one of these stocks and go build a trade with it, I am going to share this scan. Let's just call it Keltner Bounces. All right. But let me put this over here in the chat for those in the live audience. And I will also put that in my session notes to add that to the description on the video. So if you're watching on the archive, you can just pop down in the video description and you can find it there. But I think what we'll do, let's use 3M here. We have a couple of stocks. I was looking at 3M a little bit earlier today. What we'll find is with some of these, let's see what Duke is doing first. Sort of double check our filter. All right, so here's Duke. It has an old drawing on it. I'm just going to remove that drawing. There we go. Let me ask you, is the 20-period simple moving average going upward? It is. That was a requirement of the scan that we just conducted. Is price below the center line, but above the lower band? It is. Oh, and by the way, we don't need this ATR on here anymore. That was just for learning purposes. Now we understand how this indicator is constructed. But there are going to be plenty of these kinds of stocks where it might be going down, or maybe it's come back up, but it's already gone up too far. So the trader might still need to apply some manual evaluation here. And what I noticed with 3M, at least, yeah, when I was looking at it earlier today, there's our upward sloping 20-period moving average. We've come down to that lower band. There is an earnings for those that don't like to trade over earnings. I'll point that out. But it looks like we're bouncing off that band. I'm going to place a trade on this with the plan. Let's make a plan. Notice this doesn't provide a precise target, but we're going to sell if price rises to upper band. So that's for future reference. There we go. We'll let you see that a little bit better. But we are going to put a stop on this down below the recent low. Okay, so the real signal day would have been where it touched right here. We're a little bit late on this one. So our signal day might have come right back here. Low was 153.56. How about we give it a buck below that? We'll go 152.56. All right. So let's go place our trade. Let's say that we have $10,000 to spend on this trade. 158 bucks. Let's get out our calculator. $10,000 divided by 158-ish. I'm going to round off a few pennies there. Tells us about 63 shares is what we're going to purchase with a stop down at 152.56. Should we just put it at 152.50? Let's do that. All right, so let's come up here to our ask price, right click. We're going to put a custom buy order in with a stop. Notice I'm not putting in a target because I don't know what the price is going to be if it gets up to that band. It's the band it's the future band value that determines the price. So yeah, you like the note on the graph there, Jim? Yep, that's what we'll watch for in the future. But let's do, how many shares? 63 shares. There we go. And I am going to enter a market order here, recognizing we don't know how much we're going to pay for this. If we enter a market order, there's certainly a risk in that. We might not be thrilled at all with the price we have to pay. But I'm going to put in a stop at 63 shares. Make that good till canceled. Stop down there at 152.50. And we'll click confirm and send. Buying 63 shares of 3M at the market price. Selling 63 shares with a stop of 152.50. That's our trigger price. It's not a guaranteed execution price if we get down there. And there's no commission on this trade, but there can be on some types of trades. But let's send this order off. And that's it. We've accomplished what I set out to do today. I wanted to talk through just exactly what Keltner channels are, how they're constructed, and how they might be used to plan and place a stock trade. So we looked at a couple of different ways they might be used to plan trades. Then we conducted a scan to look for Keltner channel signals on that lower band, plan and place a trade with it. So this will be interesting. We'll follow up on this in future weeks. We'll also follow up on our Pfizer trade. Hope that you'll join me again next Friday, but I have other webcasts all throughout the week. As long as the markets are open and I'm not on vacation, you're certainly invited to join me in my other webcasts. But make sure, in any case, whatever webcast you like to watch, that you're subscribed to our Trader Talks channel on YouTube. So pop down, click on the subscribe button. It only takes a second, doesn't cost anything to do that. But YouTube is where you can join the live streams. You can find the playlist for previous webcasts. So that's where you would go to find this webcast a little bit later in the day, as long as we don't hit some technical hiccups with that recording. I also want to let you know that you are invited to follow Kevin and me on X. You can find Kevin there at Kevin Horner CS. You can find and follow me on X. Just go to at Cameron May CS right there. And I post regularly here. If you reply to my posts, I just try to reply right back to you. It is the place to connect with your favorite Schwab presenters in between the live streams. And you can also find and follow us on on LinkedIn. So go to linkedin.com/in/Cameron May CS. There's my handle here. Give me a follow. I post here as well. We have an interaction there. Sly says, I don't see the script link in the chat. So I posted a link. It's not a script, but I did post a link there earlier. You can find it in the description after the video concludes and is posted. But time for me to let you go. Thanks for all the thumbs up, everybody. 155 people watching the live stream right now. And as I refresh my browser, I can see 57 of you already clicked the thumbs up. That's always appreciated. It's a nice pat on the back for your presenter. But it also gives us a nice boost in the YouTube algorithm, helps more people find these videos. So if you're watching live or on the archive, make sure that you always like the videos if you like them. But go have a great weekend, everybody. Kevin, thanks for helping out in chat. I will see you all on Monday or some other time during the week. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.